Hello and welcome back. It's episode 64 of CamBro Conversations, and today's conversation we have round 2 with the gentlemen from Crypto Glasgow, Declan Kelly and Donald Cameron. Gents, thanks for joining me again.
Hello, Cole. How's it going, mate?
Pleased to be with you, and bizarrely in person. What a change of circumstances than Zoom over a laptop like the last time.
Definitely. Lucky you. Getting to see these faces.
Yeah, exactly. And the new Crypto Glasgow merch as well. We're definitely repping. I'm on brand, but don't worry, guys. I'll still hold them to account and ask them the hard questions. So for those that haven't heard, the gentlemen were on episode 40 of the podcast. It's one of the most listened to pods in the archives because Bitcoin, cryptocurrency it's a hot thing at the moment, isn't it? Everyone's wanting to talk about it. That's probably shown by the growth of your IG page for starters and some of your other services.
Yep.
And there's so much for us to dive into, but I think if we recap very high level, last time out in October we spoke loads about Bitcoin, which is one of the primary building blocks of cryptocurrency. Yep. It was the hot topic at the time. It's still a hot topic right now, but so much has changed since then. Do you want to give me some of the headlines, guys?
Let's start with the price. So back when we recorded in October, Bitcoin was what, 11,800, I think it was, under 12,000 anyway, and it's now currently today at 63,000. So obviously that's dollars we're talking in terms, but 11,800 to 63,000 in what, 3-4 months, or just over that. It's pretty insane. That's probably the best highlight we can kind of chat about, and the most that'll get people in the feels. So yeah, that was the biggest topic I think to remember from the last podcast. But yeah, so
I think so. And if we look at if somebody had invested in Bitcoin at that point, right, their investment would have been...
You're talking what, like 5x? Yes.
Which, for those that know me, I'm interested in investing in lots of different things. None of my investments are returning anything like 5x. Yeah. Not on their best ever day, not on their best ever record year. Bitcoin has been the best performing asset.
Past 10 years.
Yeah.
And it's probably going to continue. Yeah. So it's just one of those assets that... the more growth that it gets and the more word that gets out, it just benefits the holders and benefits actual crypto in general. But yeah, so it's grown and grown and grown, as we've seen, literally from October till now. So yeah, it's exciting, very exciting.
And even back from March as well, it was down at 3,500, all the way up to $63,000, so even more X for there. So that was with the COVID crash, it went down to that. And then from the COVID crash, $63,000.
If people had held it in March 2020, which you two both did, and before that, you can see why things have changed significantly in terms of your portfolio and how it looks.
Yeah,
definitely.
It's we always knew it was going to happen, as you can tell with the passion, even with the conversations we have off the kind of podcast. But we always knew it was going to happen. But it's like when, so it's just trust the what, you know. So it's just forget about the timeline. Just trust what's going to happen, and it's reap the benefits, I guess. So,
what do you think are some of the main things that have driven the increased price in Bitcoin?
The halving.
Aye, the halving, which is kind of built into the protocol, which happens. In fact, we discussed that in the last podcast, right, what the halving is, and it basically just creates a supply shock. And when that happened, kind of takes a while, takes a kind of month or so after the halving to fully start to see it through the markets when the supply does kind of drop so much and the demand goes up. So it's basically just been the halving has kind of drove this. And then when the price starts going up, that's when it just kind of snowballs and people jump on it. So it's kind of one thing after the other. But the halving definitely was the kind of catalyst for this.
That's the kind of technical side of it, definitely. And that's the thing. People think it's all just word of mouth. It definitely helps it, but as I was kind of explaining to you beforehand, it's a technology at the end of the day. We invest in a technology being Bitcoin. But the technical was the halving. That's one of the main things. But then word of mouth does help that as well, especially with the crash last year. And in the way the world was going, people want the kind of cashless kind of environment as such. And that's people look for other things like Bitcoin or a crypto in general. So it's a bit of both. It's a bit of both. For us, it's definitely the technicals was the main driving force.
Aye,
but
that's the thing that we were looking at, was the technical standpoint that we've always looked at through the full kind of journey investing in crypto. Like we says this on Instagram the other day, like our plan was make it to the halving, just make it to the halving, because basically the market was going down for years, and the plan was just, let's just make it to the halving and then see what happens. We made it to the halving. After the halving, sure as anything, the market turned around and went up again. So it's just market cycles. It happens every 4 years. It happens, these market cycles. And as Don says, just trust the process, and this is what happens when you trust it and hold strong, diamond hands.
Yeah, there's some of the kind of crypto fanatic phrases there, isn't it?
There'll be a few.
I'm certainly getting more and more on board, and for the listeners' benefit, crypto has formed a part of my portfolio since early December, and heavily influenced by understanding more through sources like yourself and having confidence in what I was doing. And my Bitcoin obviously has responded in the same way that everyone else has, and has gone the same way. Equally, I'm not going to class myself as an institutional investor because I don't have that kind of clout behind me, unfortunately, at the moment. But a lot of institutions have started to invest in Bitcoin as well, which is a real sea change from the kind of previous headlines of Bitcoin's going to go to zero, was what some of the big boys were saying. Yet now they're involved.
Exactly. I think we actually mentioned that on the previous podcast as well, where the GPM or JP Morgan were they were essentially telling people, you will get sacked if we know that you've got any kind of crypto holdings. Like, they were totally against it. Turns out they were buying it in the background. So you find that a lot of the times where the big names back then that were putting the bad word out, saying you can't buy it, it's not going to go anywhere, it's going to zero, they were doing that to drive the price down so they could then benefit themselves by buying more, which I guess makes sense from a business standpoint. It's a bit of a shady thing to do. However, they don't think about the people, do they? They think about their pockets. So it's just funny to see a lot of these things come full circle. But your biggest ones like Tesla, that's the one that we'll recognise mostly. Like, Tesla's now accepting to buy Bitcoin, buy Teslas with Bitcoin, as well as they've moved into $1.5 billion worth into Bitcoin as well. So it's these big brand names that people recognise really get more attention. But there's loads of companies doing it, and loads more will happen as well. That kind of briefly mentioned before, it's a kind of snowball effect. And that seems to happen with a lot of things. Anything crypto related is a snowball effect. Because the more you talk about it, it benefits everyone. So it's...
And the thing with Tesla as well, they're keeping that. So you pay for a Tesla in Bitcoin, they keep that in Bitcoin. You get other companies that it's just a Bitcoin straight to cash. They convert it straight away. Bitcoin Tesla hold that Bitcoin in reserve. So that's another.
You can see their belief in the project then, because they believe that if they get, I don't know, £90,000 worth of Bitcoin for a car, they're going to hold that because they think that's going to go to hundreds, maybe.
Even just hold more value, not even to go up in value, just to hold in Bitcoin, because you know that the way it's kind of programmed, that there's a limited supply, that it's deflationary, that over time, even if it doesn't go up, it's not going to go down like the pound or the dollar does, guaranteed, in percentage terms. So it's just a way that Tesla's seen as kind of storing the value, and it's Elon Musk at the head of Tesla, the smartest guy in the world. So I think after the smartest guy in the world chooses Bitcoin, then I think everybody kind of thinks, right, the smartest guy in the world's doing it, what am I missing here?
It's reassurance, isn't it? Because I think before, crypto was maybe looked on as a little bit cultish, and there's still elements of that. And I was joking about the fanatical phrases using like diamond hands and stuff like that, and that's all well and good. But you guys as early adopters are the ones laughing now. Alongside that, though, the everyday retail investor, a lot of my friends who traditionally have been like belt and races, index fund, the odd stock or share, they are now maybe 10% a month into Bitcoin versus before nothing into crypto at all. And I guess maybe I'm a good example of that as well. Equally, you mentioned a key phrase, it's deflationary. Whereas look at what's happening with quantitative easing, and we spoke loads about QM on the last podcast, but it's just been accelerated. I mean, say what you want about Trump and Biden and whoever you wanted to win in that race, but Biden's come in, I think 19 trillion is getting printed, and that can only be good for assets like gold or particularly Bitcoin, which are finite.
Exactly.
100%.
They've only just confirmed, I think it was 1.9 trillion was confirmed and paid out, like literally like a month ago. And I think that's the second stimulus as well. So it's like, it's not like a one-off. Like, it's happening quite like regularly now.
From the last podcast, there's been trillions printed, say over 3, 4, maybe 5 trillion. It's been printed since the last time we were on the podcast.
Bring it on.
And you're seeing that in assets like cryptocurrency, deflationary assets. You're not seeing it in gold yet, but that will come. Gold will moon, to use a crypto term, that will moon, because they're printing so much money, and that's deflationary. Gold's deflationary, so it will go up in value very soon. The price of gold, I think, personally, has been kind of suppressed a wee bit. So gold will benefit from all this stimulus. Definitely.
Do you know, again, that I think that gives you guys a lot of credibility in the space, because although I'm saying crypto fanatics, you recognise that other assets that hold similar values, like gold, where it's a finite supply versus demand. In sharp contrast to the dollar and the pound. You guys can recognise that. Equally, you've got a horse in the race, and you believe that crypto is the one to back. But it's your awareness overall, and I think that's why you guys have done so well. And I think that links us in nicely into some of the big lifestyle changes that have happened since October for both of you.
It's still quite surreal to us, I think, a little bit. I think it's because there was always a plan. Obviously, the biggest kind of talking point is we quit our full-time jobs. That was the biggest decision we've made. Both done that. I was December. I think you were, maybe it was October. I think you were November. So that was a few weeks before me, and we just called it quits, which at the time was obviously quite scary. Like, you're quitting your regular income as such to going full-time into this crypto world, which is, yes, we'd believe in it, but back in November and December, crypto still wasn't doing so well. It was
a risk.
Yeah, it was a massive risk. So that's the biggest lifestyle change. Obviously, it's now kind of came full circle, and it's helped out because the business has taken off, crypto's taken off, like everything's it worked, but that's the biggest lifestyle change in terms of our day-to-day business, our day-to-day lives. Still getting used to it, I think. I think when you go for so long working, I mean, we're both working, 10 plus years or thereabouts, full time, to now, I guess, doing what we want to an extent. We've still got the business to run, but it's a very flexible term. We don't call it work, if that's probably the best way to do it.
That it's a passion that you're working
with. We enjoy it, so it's not really work as such. We're constantly working. Technically, as soon as you wake up, you're working
on it.
till the minute you go to sleep, you're working. But you enjoy it, and it doesn't feel like work. So
the way we put it is we retired. That's
we retired.
We retired in 2020. That's where we look at it. Never going back to employment. Don't have any plans. Never want to. Don't see the need for it now. Technically, we don't have to, because we've now set ourselves up that way. Again, such a strange thing to say, but it's realistic.
As well, even in December, so the markets weren't as amazing as they are now. But we took that decision that we are quitting the 9-to-5 regardless. We're taking this risk, and we're just going to do us, whatever that is. If it's through crypto business, if it's through another business, we're going full time us outside 9-to-5, and taking the jump, taking the leap basically, and it's paid off. And that's what we kind of tell our kind of friends and family, like, if you want to do something, just go for it, take the jump. It's a risk, but it's worth it. And we've kind of proven that in the space of 4 months.
Pull the trigger.
Pull the trigger, aye. So we just pulled the trigger. It says December, that's it, we're done. Let's make a break, and we made it.
It's possible. Like, obviously, we've been in this for a long time, since 2017. So we've had a bit of a background in it. So that's definitely helped. But like we said, the prices didn't reflect that. It still was a massive risk. But when you've got that kind of the backing of the education, the knowledge, the support of each other, we know kind of, if I didn't know something about crypto, Dec might know, so we can kind of help out. So that definitely was a driving force about, right, let's just do it. Let's just take the risk, pull the trigger, go for it, sink or swim. And it worked. There's
an element of it being a calculated risk, given that you just said there, you listed some factors that give you reassurance.
Yes.
The education piece, the understanding of what you're going into. Well, of course, any entrepreneurial venture is a risk, because it's not a salary paid to you by a big bad venture or a traditional business, particularly you were in Dec, where you know exactly what you're doing, and you know there's always going to be a demand for it. There appears to be a massive demand for this at the moment, and that's certainly something you're I wouldn't say taking advantage of, but you're going all into, which is fantastic to see. And I've got big respect for what you've achieved so far, and it's great to see that. And I was laughing about you saying you've retired. It's a mad term, but equally, you are talking about a subject that you were talking about for free, passionately, for years. Dec sent me a screenshot recently from May 2019 where he was like, oh, big fan of this Bitcoin, like this is why, and he knew that I was investing like 15-20% a month in through my Hargreaves Lansdowne account, and he was like, oh, like even just like chuck like
1%.
Yeah, 1% of your paycheck into this, because it's high risk, and you knew that as well. Again, it's that awareness piece, but it's really high reward. Like honestly, I think this is going to the moon. Basically.
Yeah.
And when he sent me that, I was like, oh god, that hurt, because if I'd bought into that, I think it was at $6,000.
And I never says that to many people. I don't even know if Don says to many people either.
No.
Only says to close friends, family, and you, because I got a lot of value for your channel. So I felt I owed you something. So I was like, I can pay you back by exposing you to Bitcoin, basically.
Knowledge.
So, so it's not like I was messaging everybody saying go buy Bitcoin.
We got on really well. Like you and I went back and forth, because you always gave me really constructive like feedback. You would tell me about like post design and like, oh, I really enjoyed when you said this. We need to hear more about that. And you were like my primary audience, like 25 to 30-year-old male interested in fitness, but also interested in like peak performance and like work in their career and their general lifestyle. They didn't want to be like a full-time bodybuilder, but they wanted to look not far off it. And they wanted to move like it, but they wanted to have good aspects of their life. So no, I always appreciated that. So I think that's the main changes in lifestyle. Then you left the 9 to 5 grind, you've gone all in on the consultancy and the business. It's continued to thrive and grow, and I'm sure we can talk about where that's going as the episode goes. But one of the phrases I want to delve into is taking profit, and there's different ways that we can do that. Do you want to share with me first of all what the most traditional way would be in terms of maybe buying other assets?
So taking profit as such. So just as an example, you invested in Bitcoin at 20k, you want to take profit at 60k. So even if you just bought one Bitcoin, 20k, sold it for 60k, so you can, it's basically just the same as your stocks and shares, basically, to an extent, where you just exchange it into pounds and then withdraw into a bank account. So that's like kind of the standard way of just exiting crypto, essentially. But the other ways of taking profit is you can extract profit from Bitcoin and put it into another cryptocurrency. So say like an altcoin or a stable coin, which is like a US dollar pegged cryptocurrency, so it always stays $1, so it's not volatile. The way cryptocurrencies go up and down, a stable coin just stays the same. So you can take profits and put them into stable coins as well, and you can also earn kind of high yields on them, with high yielding accounts, like over 20% in some of these accounts, like Swissborg for instance. So there's a lot of kind of ways you can move profits about and take profits. Any other kind of?
I guess just to lead off of that as well, with the moving stuff around, rather than taking it out and withdrawing it to your bank. So you could, for instance, one of the examples we gave to our members at the end of February was, so obviously we've ridden the Bitcoin wave, is what we like to say. So you get it at 3,000 for an example, it gets to 60,000, so you sell some of it. You're not doing that to take the profits and go and buy something. I mean, you could, but you then ride the next wave, whether that's another altcoin or whatever it may be. So the other way of taking profits is just moving your money around. So move the money from Bitcoin, take the profits into an altcoin, and then ride that wave up as well. So you're basically making money with the money that you've just made to an extent. Some people don't see that as taking profit because they're just moving money around. But technically speaking, it's still a profit that you've made from one asset and you're moving it to another asset, which is just sheer profit. So there's many ways of viewing it.
And while keeping it in the app as well, because if you take it out of your exchange or your help me out with the phrase, guys, what's the
ledger?
Yeah. Okay, so that's where you can store your crypto. If you take it out of that, it becomes liable for capital gains, doesn't it? So
correct, yeah. So you pay it in capital gains tax, anything realised. So anything taken from an exchange and realised into pounds or USD, bank whatever account. You may be, into a bank account, yeah, best way to put it. Anything from there, then you'll pay your capital gains tax. Yeah, and
I think that's such a important point, because I think a lot of people are seeing their profits right now and they're like, oh wow, what am I going to do with all this?
Yeah.
But there's lots of different ways that you can deal with it, and one of the most common ways that you touched on there, Dec, was shaving off some of your Bitcoin and putting it into either a stable coin, which I think is a really interesting point, because you just said there that you can have up to 20% returns on a stable coin. Anyone find me a cash ISA out there that returns more than 1 or 2%, then I'll bite your hand off.
Yeah, that's a really high number that if you told us kind of years ago, would say that's impossible. Basically, you can't get those returns. But because it's a technology, there's no bankers to pay the interest to, so there's no overheads, big company overheads for all the interest that's earned on your lending of money. It's just a technology, so there's no overheads. So the the fees generated go to you, the user, which for technically it's a premium account, so that's quite an expensive account now. We got it for kind of cheap last year. But even the standard accounts, you get over 10%, which is still huge. So look, we've got a premium account, which is 20%, but standard's 10%. So compared to traditional banking, that's huge returns.
There needs to be an incentive as well, because the banks, it's so standard for you to be like, all right, okay, I get my paycheck into my current account, I put some of that into my ISA because I'm saving for a house or something like that. Whereas there needs to be an incentive from an app like Swissborg for you to hold your profit within it, and as opposed to higher percentages, but equally the higher percentages are explained by the technology and the ability to be less manpower, less man hours, therefore far more affordable, and they're able to incentivize you with a higher rate of return guaranteed, like on the yield accounts. And that really interested me when I was looking at my Bitcoin going up and up and up, and I was like, right, okay, what's this Swissborg coin? And you guys were educating about it within the members Discord, and again we'll touch on that as we go, but it helped me understand that when Bitcoin goes up and down, is there a more stable, reliable one where I don't shit my pants when I check my app? Equally, one thing I maybe forgot to say was, when we think about Bitcoin back when we were first speaking, it was up and down a lot more, whereas with a lot of the institutional investors, with a lot of people now being quite confident in it, the spikes and the candles have been, the candles are still severe, so they're going up, but the kind of drops have been a little bit less severe, so people maybe aren't quite as concerned by it.
The drops have been quite small recently, but
so far
prepare because there will be a really, really big scary drop. Not down too low, but there will be a really big scary drop in Bitcoin.
You normally see in bull markets that we're in just now, you usually see 30-40%, and that's normal. That's a scary number to even think about in any asset. Never mind when it's up at $40,000 and it dumps 20, 30, 40%. But it's, as we always say, it's completely normal, and you need to prepare for them, because they happen, well, not as often as, like you said before, like when it was a bit like lower, but when they do happen, they really happen.
And like a kind of 30% drop, that's like $20,000 been shaved off Bitcoin's price. So if you're bought in at $60,000 and it's 20,000 gets wiped off it, as you would say, you shit your pants basically. So, but that will happen. That will definitely happen. It's happened in its full 11-year history. It's always happened. You always get 30% pullbacks, even more. So what we do is prepare for that. We mentally prepare for that. We know it's coming, so that when it does happen, because the news narratives kind of change when it happens. So to make you really scared, like, oh, this isn't like before. Basically, that's the news narrative. It's Bitcoin's getting banned, or something's wrong with Bitcoin. So when the price is dropping 30%, the people that aren't educated or aren't prepared, they read these articles and they feel scared and they sell basically. So I just like to be prepared and have our members be prepared as well.
It's a snowball effect again, isn't it? It's like we said at the start, it's literally snowballing the way up, snowballing the way down. It's just word of mouth, and then the media outlets don't help that. Like the same reporter for a media company can change their tune in a day or two. Literally, they can be the bullish on Bitcoin on one day.
Bitcoin's going to 200,000 one day. The next day, Bitcoin's a scam.
The same reporter.
I think people's faith in the mainstream media should hopefully have been eroded even further, given how COVID's been, depending on what you read. And you used a lot of terms there. So the first of those was we're in a bull market. And the second of those was we're preparing for like a drop in a bear market. Let's just address for the listeners. I know a lot of the guys will be listening from the Discord and whatnot, but let's address for the everyman.
So essentially, a bull and a bear market, it's not a crypto term, that's just a kind of an investing term in general. So the bull market, because bulls strike up, therefore when it's going up, it's called a bull market. And then when it's a bear market, bears strike down, therefore down. Pretty straightforward. Essentially, they've got market cycles. I think Dec actually mentioned that at the start of this chat, but you normally get about a 4-year bear market. 36 months to 48 months, and then you get about an 18 months to 24 months bull market. Now, that's not meaning that it's all sunshine and rainbows for those 18 to 24 months. Technically speaking, we started a bull market last summer, probably, but maybe when the halving, really, so back kind of May time. But Bitcoin was still only like $4,000, $5,000, so people don't think that's a bull market. You think now's the bull market. But it's when it peaks. So it'll peak at that kind of 18-month thing, and we're getting there. We're 12 months into it now, so it's up there. There's a lot of people who will still continue to say we've got bull market coming for the next few years, but realistically they don't last that long. But yes, that's the kind of general aspect. Bull market means it's going up the way. You get about 2 years out of it, and a bear market means it's going down the way, and you get a nice. Well, I wouldn't say nice. It's a long 4 years. Shall we say?
And sorry, when you go.
No, carry on. Back to call.
Yeah, you're happy with that. I think that addresses the point though, because like you say, bull strikes up, bear strikes down. Really simple terms, and we are in a very fruitful bull market. However, you readying your members for what happens for a bear market is very important as well. And you guys have actually got personal experience of that, whereas for me, I've only ever invested and I've seen my figures in green going up the way.
Yeah.
And that's the thing as well. So the thing with a bull market, and everything's basically just been going up since March, it's just not sustainable. Nothing just goes up forever. Markets need to correct. That's just, they need to happen. People like to think Bitcoin's going to 1 million, which it probably will eventually, years down the line. But you get market cycles in between then where it has a parabolic rise, and then it will correct, and then it will parabolic rise again. So we know that. We've seen it firsthand. We basically entered the market in the last bear market, and we were investing then, and we've seen our portfolios drop 99%.
Yeah.
99%. And because we educated first rather than just investing, we get a lot of kind of messages saying, what should I invest in? Like, I'm new to crypto, what should I put my money in? And that's not the best way to go. You need to educate first, because if we never educated first and we invested and then our portfolios went down 99%, we would have sold and says it's a scam, we're done, we're finished, what's the point in that? But we educated, and we knew that that's what happens in bear markets. The prices go down over years, and we basically just accumulated during those years when the prices were down, when people would say, why are you investing in that shit? Like, you're crazy. But that's the times you need to be buying. You need to be buying when it's really scary, because that's where the most percentage gains are. So we experienced the bear market firsthand. We posted actually in the Discord as well about this, like that basically through those years, we kind of used humour to get ourselves through it. Basically, we would joke with each other saying, how much have you lost more in this or lost more in that?
It was the best way to get through it while still investing very heavily throughout it. But it was, I think it's one of the old, if you don't laugh, you cry kind of thing, to an extent. And it definitely helped.
We just used humour, and like, we would call it a scam. We just used humour basically. Every day our money was going down, and we just used humour to get us through. That's kind of always
we still do it. Like we still do it. So like if say something
XRP goes down today, we'll be like, scam.
It can be up 800% in a week, and it goes down 2%, and literally on the phone, it's a scam. XRP's a scam. Just it gets you through it, and honestly, it helps so much.
I think it's healthy that, given you guys are holding yourselves out as consultants and educators in the space, that you've experienced both the highs and the lows.
Definitely.
Because I think a lot of people, like I said, I only have
seen
good
green
emotions and seen green from my app. And that's not healthy if I don't understand the principles behind it. So you're saying there, Dec, somebody's messaged you, I've got 10 grand to invest, Dec, what should I put in? And obviously you're not going to tell them exactly what to put in. That's not how your service works. But you're also saying, right, well, you actually need to understand the fundamentals and the principles behind this before you put any money in, because emotionally you're not going to be ready to react.
Exactly.
If it doesn't go the way that you want it.
Correct.
And you've spoken to me about emotions offline, Don, where it goes the other way, where somebody wins loads and they don't know what to do.
It's the most important part, and that's why whenever someone does say that, we say, look, get your education sorted first. Everyone wants to make money. That's the end goal for an investor, obviously. But why would you not want to know where you're putting your money? Like, you wouldn't go and sit an exam without at least understanding the topic, would you? So now you're happy to put £20,000 into something just because someone else has done it. It's a very strange. I get it. I understand why, because I've only seen the green like yourself. So I understand the concept of where they're coming from. But there's some people who are saying they've got 10, 20 grand, whatever they want to invest. And we say, look, you probably maybe better get a chat with us, book a consultation, we'll chat things through, and we'll help you kind of educate and understand a little bit more. Or recommend maybe one of our guides or something to kind of make sure that you understand where you're putting your money. and then it's I'll need to think about it. You're thinking, well, you've got all this money you're wanting to invest.
Happy to throw 20k away, but just don't want to learn, basically.
Which is quite scary, and that's why we're here, because we recognise that happens daily. But it's still quite a scary thing to think someone's putting a lot of money into something blindly because they've heard Bitcoin's went up this year. It's like, imagine, I mean, now Bitcoin's about 63,000. Imagine you put your money in today and the bear market started in a month or so, and you technically didn't make any money. You made a couple £100, and then boom, you're down for 4 years. Like, you couldn't live with yourself.
And that person will then call Bitcoin a scam.
That's right. Aye.
Because they're not educated, and they feel that they've been stung or whatever. They've bought in high. But we've been buying in low. That's the difference, basically.
Yeah, during a bear market, one of the things that you do is you dollar cost average into the investment. That's a term that a lot of the listeners will maybe recognise from just standard investing. It's a standard term, but for those that don't recognise it, just talk us through what that process looks like.
So it's basically just in investing. So for instance, if you earned whatever you earned, you set aside 5% of your wages to invest in any cryptocurrency that you like, that you see a future for. Because that's the thing, when you're like, so the whole point of education is you need to think like, right, what's a real world problem? XRP, for instance, is cross-border payments, sending a lot of money across the world instantly for a fraction of a penny. So that's what we've seen. We know that money, we're in a global world, everything gets sent everywhere. We've seen there's a massive problem with payments basically worldwide. It's so expensive because Don's worked in banking and finance kind of all his life. He's seen firsthand how bad and how cheap, how expensive payments are, how long it takes to arrive in someone's account. Like businesses sending money, and the fees are crazy. If you're sending, it's quite hard to relate because it's more businesses, but if a business is sending kind of £10 million abroad, the fees on that is insane. So for instance, XRP is a fraction of a penny. So we've seen, right, there's a solution for a problem, so we want to invest in that. So to go back to dollar cost averaging, we've seen that that's a good project fundamentally. So when the prices go down, that doesn't affect us because we're not thinking about the price, we're thinking about the project. So then we invest into that at those low levels when everybody's saying, it's a scam, it's rubbish, look, the price is terrible. Why would you invest in that? The price is terrible. It's like, no, we're not investing in the price, we're investing in the project, the whole point of the project, the world problem that it's solving. So then you would average into that over time, every week, say, you invest kind of 5% of your wages into it every week. So you're averaging your buy-in cost over the years. And if you've done that with XRP, for instance, your average cost would be kind of 20 cents, 30 cents maybe, if you averaged over the last 3 years, and now it's up at nearly $2. So if you averaged in at those prices, you're
10x.
Basically. Just from averaging in, which is just setting aside a portion of your wages every week, regardless of price. So it takes out the emotion. So if it's like dumped a lot, you're still buying in. If it's pumped up a lot, you're still buying in. Regardless, you're buying in every single week, regardless of the emotion behind what's happening with the price.
A lot of passive investors do that with Bitcoin, and that's what we spoke about because I wasn't up for the whole
lump sum kind of thing.
Definitely. Lump sum's risky.
It's intimidating, isn't it? But equally, once I got to know it more, I bought the dip. So when Bitcoin dropped, I was like, right, okay, lump in a bit more than I would normally do. But more often than not, it's like a percentage allocation as part of my overall investment portfolio. And that should give people reassurance that you don't have to be like a day trader. And that's so far away from what you guys do and what you talk about. Because one of the lifestyle changes we didn't talk about was that you guys rocked up to this in an Aston Martin Don and a Porsche Dec. So you guys have done fantastically well, and I'm delighted for you.
Thank you.
But that can put you in the bracket of like living like the Forex traders, where they try and almost tell you like, this is the lifestyle I live because of what I do. You guys are very much educators away from that, but you also don't day trade, and you don't need people to follow your signals or anything like that. It's far more about understand what projects, why, and the process.
Let's kind of coming off what Dec just says, we're investing in the technology. It's funny because when we kind of first started the business last year, one of our biggest problems was trying to get away from that Forex kind of lifestyle, because it seemed to be last year they were raving last year on Instagram. Just everyone was promoting, come get my signals, this, that, and the next thing, this champagne lifestyle. But So we had a tough time at the start trying to just say, look, we are nothing to do with that.
Every live we would say, look, we're nothing like Forex trader. This is not Forex.
People don't know the underlying. I won't get into it too much because I will go off on a rant with the whole Forex thing, but people don't understand how that works. They're just affiliates. They're not actual traders. They're affiliates. So they sell you the signals and the lifestyle and whatever it may be. So they're front running this business where they're getting sent signals to their phone. They're the trader who then sells it to you and sends you these signals. And when you put your money in, they're getting an affiliate payout for you signing up. So the money's real, I guess. They are getting paid, but they're not traders. So that was one of our biggest kind of setbacks at the start, was like, look, we've got nothing to do with Forex. We understand the trading aspect of it, and trading is great. You can be very profitable from trading. But
if you're a professional.
Yeah, 90% of people fail in that market.
Exactly.
That's a legit stat.
Yep.
Yeah, well, there we go. So it's confirmed 90% do. And if you were to compare that to crypto, I don't even know what the stats are, but we can confirm that it's more than that. Just in personal, it's been more successful than 90% loss.
Yep.
Obviously in a bull market, let's not talk about the bear market, but
99%.
But no, we don't day trade. We like to live our lives in terms of, we like to do what we want throughout the day. Yeah. If you're a trader and you're a real trader, you don't have a life. You're up at 6:30, the market's open at 7 a.m, you're on it, you've got targets set out for that day, and then you're working throughout the UK market. You might even work the American markets or the Asian markets, so you're up all night. For us, it's just not a suitable lifestyle. It can be profitable, but as I said, if you're a professional...
It gets marketed as like 2 minutes a day from your phone. It's so easy. But to be an actual trader, like, traders will be angry when they see that. Like, real traders will be angry because the amount of work that goes into real trading. So it just gets marketed terribly, and it is just to get the affiliate cost, the acquisition cost, basically, for these trading...
The brokerage and the platforms, yeah.
Brokers, yeah, exactly.
I think people can see the difference. I mean, the cars, we seem to have went for cars that are not so Forex scammery, because we had spoke about different cars. Yeah, like i8s or an R8 or even a Lambo's now. A really good Forex scammer can get a really nice Lambo now, and that's the route I wanted to go down, was a Lambo. There was nothing I was actually telling Dec not to get a car. So the whole thing about the cars was, I was telling Dec not to get a car. We don't need a car. Being such a mother, because we've got the business car, and I ended up buying a car the day before Dec. So it's just one of those things. It's just, I think as soon as you start talking about cars, we're just like, let's go for it. But I feel like we've kind of chosen two subtle-ish cars that are not too Forex scammery.
But equally, you haven't said to anybody, get into crypto and you can get this.
Aye,
obviously, you're saying that crypto freed you.
Yeah.
But you bought in 2017.
Yeah, exactly.
The vast majority of people you're speaking to are buying in for the first time in 2020 or 2021.
Correct.
So there's a radical difference. And that's why, like, I have had a Forex trader on the podcast and he steers well clear of that. So for those that are interested in diving back to that, it's episode 38. But the guys differentiate entirely because it's about education. You cannot sign up to the Discord or the members Telegram and get told, buy this coin, sell this coin here. That's not what it is. It's about education. Yep. I've been in it since December and I've learnt a tremendous amount on the principles that has given me the reassurance to part with my hard-earned cash that I get from my salary and pick based on what's available.
The principles, so you can pick yourself off your own back rather than kind of just listening to what someone else says and copying that. We like to be able to, as you've said, lay out the principles, and then you can make your own decisions for yourself. You make your own financial decisions, which is what we aim to do in the Discord. The Discord's basically just a place where we update what we're doing, why we're doing it, kind of emotional updates. And that sounds like it's not something you would think about, emotional updates, but it's when you're dealing with that kind of amount of money, your emotions run wild. So emotions are key. They're number one, emotions.
Actually, I said that to you just beforehand as well offline. If someone's to invest £10,000, it can very easily at one point go to 70 grand. And you think, oh, it's great, I can't wait to have £70,000. But when you see your investment grow from £10,000 to, say, £70,000 in sometimes a couple of weeks, sometimes a week, then your emotions completely change. You think you know what you're doing until you see these figures. Again, we've experienced it firsthand. We've rode all these different types of waves. And
how did you deal with it, Don?
I think for me, because of finance helped me, because I've seen numbers, I've seen like scary digits on a screen before, and I think because we're so detached from our portfolios, I think that helps as well. At the start and through the bear market, it was constant. We're on our phones wanting to know what's happening, and you're very conscious of how much is up, how much it's down. But I think over time, maybe the business has helped that as well, because the business has kind of taken our mind off of our personal portfolios as such, because we're having to focus on the education of ourselves, because we still have to educate every single day to make sure that our clients and our customers have the same education. So I think that helps. And then just the detachment of emotions. I think it helps that it's just numbers on a screen, because you're not checking the exchanges all the time. You're really we use an app called CoinStats, which is just to track all of our portfolios. So you can't really change anything in that. It's just to show you the numbers, the profit and loss. So you can go in and just quickly sell anything from that. So I think that helps. But again, I think it's just over time, it's the money we've dealt with previously and the things we've done, it's emotions. It's just emotions. It's experience and emotions.
Yeah, there's been conversations in the Discord, but also on Instagram for those that aren't paying customers about the investor mindset. And I think you've spoken a lot about it there around detaching from your emotions, understanding that it's going to go down.
Yep.
Yes, it's going up just now. Fantastic. Realise that and allocate your profits accordingly in the different ways that we've spoken about. Equally, you haven't taken a lot of profit because you believe in the projects.
It's just not, we've not fully reached our targets yet. We set out profit taking targets, for instance, like the cars and a few other things that we've set that out. We're taking out this much at this price and that's it, and we're buying what it is. If it keeps going up, that's fine. We've hit our target, we've won essentially, we've took a win. So we've still not hit our full extension targets that we're looking to hit across all the assets that we're investing in, because we're still technically in the bull run's really heating up just now. So our targets might be met this week, next week, a month down the line. So when we do hit those targets, we'll be executing what we says we would do, because we're detached from our emotions. We set out a plan before the emotions were here, basically. So if you had a target of, say, 20k, and then you hit 20k, and then you start going off emotions, I could maybe get 25k, I could maybe get 30k, 100k, and then you go emotional. But if you detach from emotions, no, I've hit 20k, I'm taking my win here, and that's it. So I bet that's kind of...
That's how you think about it, and that's what's kept you level. When, like Don says, sometimes you're looking at it's gone 7x, and you've had a big investment to start with, which I think a lot of people, it's different. Like I'm 100% up, but I didn't put in 10 grand, so I'm not losing my mind. I've not got I've got 20 grand sitting there off the back of a 10 grand investment.
So that's what we always say. It's depending on the individual. Like 10 grand to me might be 100 grand to you, kind of thing, and the way we look at it. It's just the individual. Some people like to invest £100, and that's a lot of money for them. Whereas we've got clients that have got millions, and it's nothing to that. So it's maybe that's another thing as well. The people we speak to, it's such a diverse clientele have.
It's open to everybody, because crypto is an open network. Everybody's got access to it, which is the amazing thing. So you can start with a fiver, you can start with 500 grand. Like it is so diverse, which is amazing. We get messages for people, how much, I've not really got that much money, how much do I need to start? And it's like, the mindset's wrong. You don't need a lot to start. £5 a week is plenty. £10 a week is plenty. Because if your mindset's right, where you're investing long term because you believe in the technology behind it, then £10 a week over the next 5 years, you're going to be kind of up a lot when this technology is implemented and kind of spreads worldwide, like it's doing.
And to these people, you would use a crypto phrase, which is HODL. Have I said that right?
Yes.
HODL, yes.
Hold on for dear life.
Yes. It's proven to be the most successful way of investing in crypto. I think the last time I checked, it was something like 95% of the time that you've invested in Bitcoin's been profitable, just by the way that the markets went.
Will be 100% today.
It will be now, it will be now.
So 100%. So regardless of when you bought Bitcoin,
you're
in the
last
11 years, you're in profit.
Find something else, any other asset class that's done that, and it's sustainable. And it's sustainable for the 11 years.
It's an all-time high right now.
Exactly. So it's just a mad market. I think a lot of times people don't believe it until they see it, and then when they see it, they're too late, or they feel like they're too late.
And that's through the money, which isn't the best thing, because they're seeing that people are getting involved because of money, rather than what is this? What's the technology behind it? Why is it so valuable? That's what you should be reading into first, the technology behind it, and then you're investing in the technology. You're not just investing to make quick cash.
Yeah.
And do you see yourself as people that are holding then?
We have done and we continue to do. So like we said, we've retired. So crypto is this is our lifestyle now. So we need to have a sustainable income as such. That income will now come from crypto, whether it's a yielding account. So it's, yes, very much so. This is our generation. And we've said this so many times on IGTV over the past almost year. It's generational wealth we're trying to create. We're not trying to get rich. Like, well, quick rich. If it can happen, it's very possible.
Yeah.
However, we're not interested in that. We're interested in making sure that it's sustainable for the foreseeable future. Because we've got big plans. We want a lot of things in life. Everyone wants to go in fancy yachts and goes on fancy holidays and have the cars and the houses. But that's great for a few years, but you're going to be able to pay that for the next 10 to 15 years. Yeah. So that's why we are the HODL gang, if you want to use a term.
Yeah, I respect that, and it's because of your belief in the project, and I think that reassures me that although my Bitcoin's up just now, when we go through the bear market and we see a correction of 30-40%, God forbid, but it does happen.
It's going to happen.
It's going to happen. It's going to happen. So I'm mentally braced for that though. But I'm going to hold it because long term, the projections are for it to go well beyond what I bought it for already. So say I bought in at $30,000, and it goes to less than that. Obviously, I'm down for that period, but I've not sold it, so
correct.
I'm not actually down.
It's
only in the app. It's only in the app.
Correct. It's a good way to look at it because people tend to think of it as like gambling. I heard someone say it's like gambling. For instance, if you were to put £100 on a gamble on a horse or whatever it may be, if you lose, if that horse doesn't win, that's £100 gone. That can't then come back and you win more money. It's gone. Whereas with Bitcoin, for instance, you put £100 in, it might be down for a couple of years, but the chances are it's going to go back up. It's just you've not lost money until you withdraw that money. You've still got the 0.01 of your Bitcoin. The value changes. The actual
comparison value.
Exactly. Dollar comparison will change, but the actual asset doesn't change. It's still the same figure amount.
That's an incredibly important message for people ahead of maybe what will be a turbulent time in the future.
And even when you're saying like about the 30% pullback, so if it falls 30%, that doesn't signal the end of the bull market. So I wouldn't, just as a wee personal thing, I wouldn't be thinking that.
Don't worry.
Buy the dip.
That's a buy the dip moment. We'll let you know when the actual bear market starts.
But that's why you need to be tuned in. That's why you need to be educated. Because I would have maybe thought, all right, okay, that's the start of the bear market because there's been a correction.
Yeah.
Yes.
One of the other terms that has been thrown around a lot recently, and you get asked about it all the time, is alt season. Yep. First of all, what's an altcoin?
It's called an alternative coin. So it's alternative to Bitcoin. So Bitcoin was obviously the main one, and it's what started this whole craze. But Bitcoin's slow for what it does. It's a currency, but its movements are slow because of the way the process is through the blockchain. But so you get alternative coins. So essentially, they're not a rip-off of Bitcoin. They're just a different type of crypto. They've all got different use cases. Some of them are products, whether it's a debit card or something. So that's an altcoin, or XRP, for instance, our flagship, if you like, the flagship coin of Crypto Glasgow. But that's cross-border payments. Then you've got Swissborg, who are an exchange. So every altcoin isn't just about trying to be what Bitcoin is. They all have their individual different reasons behind why they are an altcoin. Essentially, it's another project. That's the way to look at it. It's rather than thinking of it as the altcoin and the Bitcoin. Bitcoin is Bitcoin. That's just the way it is. The altcoins are projects, and a lot of them have companies behind them, whereas Bitcoin doesn't. It's just this
decentralized
a network. Exactly. There's no one in charge of it. There's no CEO. There's no meetings. In fact, we actually posted a really interesting post on the Instagram 2 or 3 days ago, just kind of breaking down the crazy stats.
Bitcoin's worth $1 trillion, and it's never done any marketing. It's never paid for marketing. Bitcoin's never had a board meeting.
Yeah. But yeah, it's still over $1 trillion. It's just more valuable than most of these big companies. But
I was reading that. Sorry, don't to cut across you, but there's more money in Bitcoin now than there is in Apple.
Yeah,
and that's reassuring for investors as well, because the market cap for it is so high now.
Yep.
Meaning that there's a lot of, I want to say, real money behind it. There's a lot of big hitting money behind this. It's
institutional money behind
institutional
it.
Money.
Kind of MicroStrategy. They invest hundreds of millions, I think, on a weekly basis. MicroStrategy.
That's been the biggest difference.
They're paying their CEOs in Bitcoin. a lot of there's a lot of institutional money this time round, and that's what we were kind of looking for back in 2017, 2018. We're waiting on these institutions to get involved, because at the end of the day, if the technology's as good as it is, then people are going to start using it. It takes time to gradually for people to wake up and see it and experience it and use it. But when they do, again, go back to the snowball effect. Tesla are doing it now, PayPal, all these big hitting companies, and then the other big hitting companies say, right, they're into Bitcoin. What's this Bitcoin? We need to see about this. So it's just taking time for a technology to be exposed to the world. But a lot of the world are seeing it already, but it's way off being mainstream, fully mainstream. It's way off that. That's probably the next kind of bull cycle that we'll have, when it'll be proper mainstream. So currently, just now, still not many people know or understand what Bitcoin is. So we're very early still, very early.
Going back to the kind of the main differences, that's Dec said institutions are more involved this year with Bitcoin. That's because that's just a big brand name. But the altcoins, so everyone, the way it works essentially is Bitcoin will have its, I call it ride the wave. So Bitcoin will have its wave. It's up about 1,600% since March of last year. It's not going to do that again. It'll maybe do a couple of 100%, which again sounds like crazy numbers to just kind of chuck away, but it's already done that. So what you find is investors will move their money around, and I briefly kind of touched on that at the start of this chat, where you move money from Bitcoin into these altcoins, and that's exactly how it works. Just ride the waves, ride the wave of Bitcoin, take your 1,500% gains, move them into these smaller projects that are trying to that have use cases like Swissborg or Pluton or whatever it may be. Then they'll ride the wave, and then that's when it comes back to kind of bull bear markets and whatnot, and that's when I believe, and I'm sure Dec believes as well, is institutions will now start thinking, I mean, they already are technically, like Grayscale, for instance, a digital asset investment company, are now branching out into these altcoins because they see the need for it, because Bitcoin's, it's had its kind of, not its blow off top quite yet, but it's getting there. It's getting there. So it's like, right, where can I get money now? Where can I move my assets and move money into to now? And that's where the alts come in.
And that's the thing as well. It's highly speculative. The whole point of investing in these altcoins is just pure speculation that this is the next Bitcoin. And then, so Bitcoin has its kind of parabolic rise up to $60,000, $80,000, whatever it goes to. And then people start to speculate, what's the next Bitcoin? And that's when you see this surge, almighty surge in altcoins, with people just looking to find the next Bitcoin.
Yeah, we spoke about this. When Bitcoin reaches a top, be it 80,000 for argument's sake, then people, like you say, they go looking for other ones, and that drives the market for these altcoins, because some of the altcoins have quite a small market cap.
That's right.
Meaning that if somebody or a lot of the bigger investors take their money out of Bitcoin and put it elsewhere, then some of them will go on a surge that will be beyond 1,600% potentially.
I mean, Swissborg, one we've mentioned a few times, from June of last year until kind of last month, it was 7,500% it had done. Even big names like Cardano is one that people probably recognise, has done 3,500% already. So it's these numbers to the listeners might be like, what? This doesn't sound like it's legit, but this happened like on a weekly and monthly basis with these altcoins, because like you said, the market cap's so low. So when $1 billion or maybe even a couple of 100 million does flow into that means a lot. That means a lot to these projects.
And we're coming into what you call alt season. Because Bitcoin is starting to get to its top and the money's starting to go elsewhere. So we're going to start to see some of these new market participants rocket.
Exactly. And it is just because people are speculating. People see Bitcoin 60,000, they say that's so expensive. I don't want to buy Bitcoin, I want to buy this. This one's only 50p, I'll buy that. So then all the new money, all the new retail money piles into that, which has a crazy parabolic rise. We call it face melting, which is we face melting when it happens. But when that is happening, that's when you know we're getting to the top, because all the new retail investors come in. The kind of people that have been investing over the last, say, 6 months are kind of savvy. They're kind of taking a risk. They're thinking that this is something. But then when it starts getting parabolic, that's when the old women across the roads buying Bitcoin, the taxi drivers buying Bitcoin, everybody's buying it because they just see the money going up, and that signals the end. When somebody random that's not got a clue about crypto mentions it to you, that kind of signals the end. And again, it's caused by just a parabolic insanity of alt season, which is where your portfolio can go from 1,000 to £50,000 in a week, 2 weeks.
If you've got the right small altcoin that's going to win.
Yeah.
We talked a bit about XRP. You said it's the flagship of Crypto Glasgow. It's actually the car registration on the Crypto Glasgow car, not the Porsche, not the Aston Martin, but the shared one.
Yes.
Yeah.
What gave you so much faith in XRP, apart from, obviously you've spoken about the principles behind the project, but surely even when it was down at 20 cent per coin and people were making fun of you on Instagram and putting about memes about it, what were you saying to it?
We love that. We love that.
That's
and
why
again,
we did like it so much.
Yeah, all of our IGTVs, we say that. We're like, we love the hate that it gets, because you know us kind of personally as well, we're very just kind of straight to the point, laid back. Like, we use a lot of common sense, not just in crypto, just in general kind of day-to-day life and working any kind of subject out. But XRP for us, as we kind of touched on, the fundamentals were there. And we're investors. We're not just kind of quick rich. Let's get some money. So we are looking at underlying projects, and we strongly believe that XRP was that. Or Ripple, the company, and XRP, the crypto was the way forward. So we seen it as buying opportunities, and our Discord members know that. We've been buying all the way throughout that 17.5 cents, all the way up, all the way down. Like, we believe in the project, so the price is not a big thing for us. Obviously, when it's up, it's a big thing because we're in profits. But it's the actual project itself. We set a goal. We knew what it was like at the start. Nothing changed. We actually posted something on the Instagram story recently where we're saying, look, the fundamentals haven't changed. Like, what the project are trying to do is still the exact same. The price just doesn't reflect exactly where it should be. But if you believe in it like we do, and you understand where it's trying to go and what it's trying to do for the global finance, then why would you not want to invest in it?
You want to be investing when everybody's saying it's scary. Why would you invest in that? It's not moved. It only goes down. When the kind of general consensus, everybody's saying the same thing, you want to be doing the opposite. And that kind of instance anyway. You want to be going against the grain when everybody's scared, everybody's saying it's pointless to invest in. That's when the smart money's investing, that's when the institutional money's investing, when the general public are scared, basically. And that's what we loved. We loved the hate. We loved it. Every crypto page doesn't like it. For anybody that doesn't know, XRP kind of gets called like the banker's coin, because they're kind of in with the banks. They're even kind of looking into central bank digital currencies as well. They're really kind of, and that's why we liked them as well back at the start, because they were the bridge between, so crypto is this kind of decentralized Wild West, but XRP is this bridge where it's decentralized, but they've got a company that's willing to do deals with institutions, with banks, with governments. We like that bridge. It's never just going to flip from traditional banking to Wild West crypto. It's like, use common sense. It's not going to happen, and people don't like that. People kind of crypto maximalists hate that. They say, no, it's centralized, they're working with the governments, but it's like, no, use common sense. Like, the government aren't just going to say, right, everybody, we're finished, go do cryptocurrency. It doesn't work like that. So we seen that, we called that, and
you drowned out the noise.
And drowned out
100%.
Exactly. That's perfect description.
If we even look in another sense, March 2020 when the COVID crash came, loads of people sold their stocks and shares when they're in the red. I was lumping in at that point because I was like, well, there's no chance that these stocks are going to stay down because COVID is a short term, albeit longer term than we hope. It's longer term than we hope. It's a short term disruption versus a housing bubble crash, which was a lot more sustained and a lot more hard. Whereas we were stopped working and stopped the economy because of a disease, not because of a fundamental system flaw. Sorry. And I think that's interesting that you guys are like very much of that mindset when it comes to your own investments too.
100%.
And XRP dropped to 11 cents during that time.
11, its lowest point. And it's now today, like we said, it might be $2 now. We've not even checked our phones. I'm starting to get anxiety from not. I'm used to looking at my phone every 2 seconds. Like,
your screen time would give me the fear, guys.
Yes, it would.
You need to join my email list and find out how to reduce it. But I'm
subtle plug. I like that. Subtle plug.
That sounds good.
To be fair, you run your business off it, so inevitably your screen time's going to be.
That's an excuse, but it's spent on coin stats for about 7 hours a day, just watching those numbers.
Yeah, that and Instagram, answering all these DMs.
Yes, that's
and recording the live as well. So there's
a lot going on. There's a lot going on.
There's a lot behind the scenes.
Yeah, definitely.
The business has done fantastically. What is the plan moving forward?
Business terms, we've never really had a proper business plan, have we?
No.
The reason for the business was the demand was there. So obviously me and Dec been in it for so long, a lot of our kind of close friends and people that I used to work with knew me as the crazy crypto guy and in the office. But so we were getting a lot of questions, especially because crypto was really down because of the crash. We're getting a lot more questions, and we were thinking, well, we could kind of help. There's a need, there's a demand. So there's a demand there, and we'll have that supply there. So that's how the business started, and it's just grown. It's such a crazy kind of come up, because it was quite a slow start, we would say, like, because Bitcoin was still really, really low up until about November time. And it's been the past 6 months, it's been astronomical, or parabolic, to use a crypto term, or it's been parabolic literally since kind of December, Christmas time, hasn't it? So plan wise, we don't know.
It's everything changes so quick, especially in crypto, the industry that we're involved in. So we'll move how crypto moves, essentially. What we would kind of like to do is, like, when we were getting through the bear market as such, we had kind of content creators who would show up every week and just tell you, look, this is what's happening. So the prices are tanking, the prices are going down 10, 20% daily. The prices are just tanking, and you've got these content creators who are putting out, right, so this cryptocurrency just signed a deal with this company, so they're kind of updating you on the real fundamentals behind it, which gave you that no hope, but it just gave
faith.
You that faith that it's more than just what the market is putting the price at. So I think going forward, we'd like to be that kind of
voice of reason.
Like through the bear market when everybody's scared, like we've been doing basically with XRP the last kind of 7-8 months. When everybody's scared, we've just been the voice of reason, saying, look, XRP is the exact same as it was. It's even better than it was. They're signing more partnerships. We just want to be that voice of reason when it does get into a bear market and people kind of start to question themselves, question their investments. So it'd be good to be a voice of reason
during that period, because at the moment, of course, the business is growing, and you've joked about this with me as well. When everything's going up, of course, people want to sign up to the Discord and jump in there and share their profit stories, but also learn about maybe what altcoins do the guys have targets for, what do they have respect for, and that's obviously stuff that sits behind the paywall in the Discord, which is a great part of the service. But you guys become just as valuable when everyone's losing their mind because the app is showing that everyone's going into the red.
Correct. And that's why we're here. Like, I guess the plan's next for us. We've kind of tapped in a little bit into the YouTube kind of market. You've seen a few of the videos ourselves. So it's not part of the Crypto Glasgow business, but it's like under our umbrella of what we want to do as such. So we've got that, which is, I guess, still a business at the end of the day. We'll be moving into podcasts as well. So we're still setting ourselves up so that when crypto isn't as popping, if you like, then we can still keep your mind at ease. But it's not going to be as many updates, because there won't need to be as many updates, because not a lot of things will be happening. So we are still going to provide that service in terms of maybe it's a podcast talking about other subjects, or still crypto related very much so, but just other financial market updates to keep you informed. I guess that's a kind of the business plan as such, if you would call it a plan.
I think from an outside perspective, I can see that you're not foolproofing yourself, but you're spreading yourselves on different platforms with the content, because we've joked that Instagram could go tomorrow. Actually, I was saying to a friend today who helps me with my email list, again, we're talking about the email list, but
plug.
Genuinely, my reach on Instagram stories was a third yesterday, and I didn't post anything different. Didn't do it. I asked my question of the day, which gets lots of engagement. I put a swipe up for the podcast. I put some stuff about muscle food, a bit about my meal protein, showed I was out a walk, standard stuff. Would normally get a certain number of views. It was thirded. For whatever reason, Instagram didn't want me to be seen that day, and that's fine. But things that you can control are things like the Discord, where you are decentralized, email lists, which are decentralized. Appreciate YouTube is heavily censored. Podcasts at the moment, you're pretty wide open on there. You can talk about what you want. You can be quite forthright in your opinions, as long as you're measured, and particularly over a longer form conversation, you can give context to your point, so people don't get you cancelled off a 30-second clip.
Yes.
And that's been a godsend for me. But it's really good to see you guys spreading out across that. And given that you guys like decentralization, it doesn't surprise me that you've got yourself spread out across these different things.
Exactly.
I think it's important to, again, because we're talking about generational wealth and the future. we're riding the wave. Again, I'm going back to this term. Riding a wave is so important because crypto's, it's going to be here for, we see it forever, obviously, but there's only certain years where it's very profitable and it's worthwhile being involved, and that means we need to allocate 90% of our time over there. But we're in a bear market, we can maybe put a 40% time into crypto and then start breaking that up into a YouTube, and we start doing a vlog kind of type stuff, which we're going to move into, and we kind of have started already, then the podcast once a week. So I guess it's for us as well, like this is now our way of life, so we're trying to make sure that we can allocate time so we're not sitting at home doing nothing. Crypto is always going to be our bread and butter, if you like, but we see it when it's required.
I think the podcast as well is like a way for us to share our common sense, basically, to an extent, to relate back to kind of like stocks and stuff. Even with XRP, it kind of relates in with that. So, for instance, Tesla, I think it was maybe 4 years ago, I was investing in Tesla, and me and Don were speaking about Tesla. All the news articles about Tesla at this time were terrible. Someone killed in car crash, in Tesla crash, like the news were just pummeling Tesla, and the price was down so low at this point. I don't quote me on this, but say $200, $150, something like that. And people were saying Tesla's the worst buy ever. Don't buy it. Why would you buy that? The price is down. And we says no. Electric cars are the future. Yeah. Tesla's the best electric car maker. Why is that not a good investment? So we never listened to the noise, and we took our own decisions, invested in Tesla, and then after that it went up to $2,000, maybe more. So we just like to kind of, I don't know, use common sense in everything and think for ourselves, and the podcast will be a way for us to kind of share that and maybe inspire other people to think for themselves.
Across a wider range of topics. Critical thinking is something that we don't have enough of in 2021, as you've probably seen from how we've dealt with COVID and whatnot as well. Last thing around investments before we kind of wrap up, guys. You've diversified a little bit. Crypto's the base, but I know that you bought some other finite assets, and that's a big driver for you. What were those? Just
collectibles. We like collectibles. We've always liked.
Let's not get Dec started on Pokemon cards.
I've ended up into Pokemon.
You've got to catch
cards.
them all, mate.
Exactly.
Dec's in a bit
That's what I keep telling myself. I'm in a bit of a rut with Pokemon cards now.
It's a good thing though. Like I say to him all the time. It's like it's a good thing and it's a bad thing. Getting stuck in a rut, if you like, it's not a bad rut to be stuck in. They're still an investment at the end of the day, but they're also a kind of
limited supply.
And there's so many different types of cards you can get. That means the value spikes, and it's literally like one little corner of a card can be chipped, and it can be thousands of pounds worth. You know, so there's a very crazy market. So it's interesting.
There's a lot of money in it, in Pokemon cards, for instance. But the thing with that is, I enjoy them as well. So, like we would say to people, don't buy in Pokemon cards as an investment to make a lot of money off, because some of the cards are worth 10 grand, 20 grand. Like, it's funny money. But that market can crash as well. So you need to enjoy it. So I enjoy them. So if the market crashes tomorrow, fair enough. I still like them. What the market price is doesn't affect me. So we would say to people, don't invest in it just to make money. That's kind of a fun, passionate investment. We bought like bricks for Eminem's childhood house, which is cool.
That's everyone always questions us, like, you'd paid how much for a brick? Like, how do you know? But it's like,
it's only finite. 700 of them.
Imagine when he dies.
Exactly.
I know.
Yeah,
that's a bit morbid, but I mean, genuinely, like,
100%. I mean, the amount it's risen for the amount it was actually went on sale for, and the amount we paid for it, it's already went a substantial amount higher. So. Again, we don't care. We don't plan on selling it because we're big Eminem fans.
We enjoy that.
So it's such a cool thing to have in your living room. You've got a piece of the house where Eminem grew up in, and it's like you get a hand signed like Slim Shady thing. You get a couple of extra things as well. So it's just an enjoyable asset, I guess, investment. We just like collectibles. That's what it is. It's just like I've got a signed. In fact, you've seen it as well. You're a big fan of The Weeknd. So I've got one of my probably my favourite albums, Kissland. So I got that signed, and it's like PSA, so it's confirmed it's real. Again, I don't care about the value. I just really enjoy that.
We used to buy more investments to sell on when we were coming up, but now we've kind of got a bit more wealth as such. We're buying collectibles that we like, not to flip, is for profit. We'll still flip stuff for profit if it comes up.
Everything's for sale for the right price.
But these new kind of collectibles we're buying is just kind of personal things rather than
long-term holds as well, and
definitely.
Exactly.
pass on to
exactly
the future
100%.
generations.
Definitely.
No.
It's just fun to look at as well.
Yeah, of course. No, I definitely rate the weekend purchase for
Yes.
for starters. But gents, that's been an absolute pleasure. I'm sure the listeners have enjoyed it as well. Where would you like to signpost them for those that aren't already involved in your stuff?
Best place to get is Instagram. That's our kind of flagship again. Flagship's Instagram. And you can get everything you need. We've got a link in our bio that literally takes you to our website, to a consultation. If we spoke before, we have 2 different guides as well, like crypto guides to get your knowledge right. Again, we highly recommend education. It's the main kind of reason why we're here.
Don't invest until you understand.
Exactly. So again, Instagram, so it's just crypto.glasgow on Instagram. Best place to find us. Anything you need from us, either shoot us a DM, but your best place is maybe a consultation. That's what I would say. You get that from the link in our bio.
That will all be linked in the show notes below. And if you're watching us on YouTube, which I know a number of you will be, please hit the subscribe button on this channel. But also, the boys have got their own channel, which is Freed Up.
Freed Up.
Yes.
So that'll be linked in the show notes as well, because you're going to want to see some of the content coming off the back of that. It's really high level stuff, exciting. Bit of day in the life stuff that's coming as well, which will be good.
Yes.
And I think that'll be incredible. If you're listening on audio and you're listening on Apple Podcasts, give us a 5-star review. Anywhere else, take a screenshot, pop it on your Instagram story, share this with a friend that needs to understand cryptocurrency a little bit more, because these guys are getting the message out there from an educational standpoint, and personally, I can't get enough of it. I'll be back to speak to you all again very, very soon.